All right. Good morning, good afternoon, and good evening to one and all present here. Once again, a warm welcome from your host, Harsh, and I will be with you for the next at least 60 minutes or so. And predominantly, the session that we are going to cover today is, I believe, it's going to add a lot of value to the existing live market analysis series that we have been presenting since last 3 months now. It all started in October, I think October, November, December, and we are now again beginning with the educational and the live, a combination of education and live market analysis. So the next webinar that in this series will be on 15th of January, same time, and it will be on the live market analysis that we have been doing in the past 2 to 3 months. But I firmly believe that all of us, including me, will be greatly benefited when we are touching base with the basics again. All right. So once again, a warm welcome to all of you. Present here, all ladies and gentlemen, and my brothers and sisters. Feel free to ask anything that you are in doubt, or maybe you're not in agreement with me, and I will do my best to answer your questions during the session, or maybe you can send me an email if you don't have any questions right now, and I will be more than happy to get back to you through the mails later on. All right, I believe that you are able to see the screens and also the audio video clear. If yes, maybe one of you can just agree with it and we'll get started off. Yeah, thank you, Haresh. Thank you, everyone, and let's get started off now. So, if you have been following my webinar since the last 3, 4 months now, it's been basically based on the Elliot wave principle. We started off with the theory portion initially in the month of August and September, and since then we have been focusing on the live market analysis. Today I'm going to combine both, but predominantly we are going to start off with the basic understanding of the wave principle once again. All right, that is going to be our agenda for today. We'll discuss about a few historic uh, things about the wave principle, why we are using it, and because of whose grace that we are using this. Right. We touch base with the basic pattern once again. A few rules that we need to follow, and it is not a choice which is given to us that if you want to follow or if you like to follow, you can do that. Basically, these rules have been laid down after a lot of study, actually not by me, but the father of the way principle, which will come up across the slide very soon, Mr. R. N. Elliot. And when it is a rule, it is a rule, and if we follow the rules, we are going to be more close and very objective on the analysis part. Believe it or not, uh, the wave principle as normally being conceived by traders out there, that it is a very complex theory. It's nothing like that. It's the only problem occurs when you try to or when I say you means I'm trading the trader. It could be me as well. When we are trying to perceive the wave counts as we want them to appear, that's where the basic problem starts. So being objective and following the rules exactly which are being laid down, we will discuss some of them today, not all of them, because the arena of the wave principle is too high for a session of about 60 minutes. I mean, believe it or not, to master any technique, you need to spend about at least around 10,000 hours, and that is a scientific rule. All right, but I'll do my best to explain. This is the best part, understanding the fractal nature of markets. Once you know the pulse, what is going on, and how the formations are happening, you'll start enjoying the game. Believe it or not. And finally, we'll touch base with a few trading strategies that you could apply on a simple wave count or a simple wave. Okay. Um, and that really helps us to trade with confidence. All right. Question and answer is not a different segment all the time with me. This. I always keep on saying that this is your session, and it's my passion that I'm delivering here. I'm not a conventional speaker. I'm basically a chartist, and I love reading charts and doing my wave counts as proposed by the charts. Sometimes I do make mistakes, but it is really fun. So feel free for the session, and don't wait for the question and answers time, or don't wait for anything else to come up before you pop up your questions. All right, this is your session actually. I'm just a facilitator here. So let's get started off. If you have been following my webinars, each time I do a live session, I make a point to bring this slide on all the time. And it says that financial markets are pattern. Believe it or not, it is amazingly true when it comes to the statement here. You are not late, Marina. Maybe we are just starting, so it is not late at all. It's about yes, again, hello from Brazil, she says. Or all right, I think we are good now. Let's continue. So, believe it or not, whether you have read this or whether you have traded this, traded your charts or traded your markets with the following understanding, I don't know, but whether or not you've been doing this in the past, period. One thing that all of us need to understand and believe that financial markets are patterned. It does not go any further than this slide. Believe it or not, it is not. It markets are very smart. They take into account everything that we conceive and we believe that is making it move. Like for example, a fundamental news like let's say U.S. government shutdown, which is recent hot news since last week of December. It discounts everything, believe it or not, and it shows on the charts, it shows on the patterns that are being forming. And the best part is that they are repeating themselves. I repeat myself, financial markets are not only patterned, but they repeat themselves over and over and over again. This is the most beautiful part. All right. So So how many patterns are there? If I give you a very brief concept about the most important patterns that we are looking to trade, there are five amazing patterns which you can identify and trade for yourselves. There are only five great technical patterns, all right? But then there is theory onto it, and there are different alternative scenarios that you need to keep into focus, but predominantly there are five patterns: the impulse waves, the flats, the zigzags, the triangles, and the ending diagonals. That's it. So it's not too many that you need to focus on. and they always tend to repeat themselves. I'm spending enough time on this slide because we all need to be on one plane, that markets are not moving actually by the news that is coming out all the time. 95% of the traders do believe, yes, news are not fake ones. I don't say that they are fake. Don't trust them. News are news. They have to be there. But when you base your trading, when you base your trades or your stop losses, whether you want to trade or not, on the basis of what is going to come out, is very dangerous. That's the point we all need to understand. And once we start believing onto this statement that they are patterned, it slowly turns into conviction. It will take your own time. You will not get into that phase just by listening to me, but at least you can start off with the faith, then it converts into belief when you start spending time on your charts. And believe it or not, you will have to spend time on your charts alone if you want to really master or really start enjoying this subject. All right, let's move ahead. It is because of this gentleman by the name of Ralph Nelson Elliot who laid down the guidelines, the major guidelines and principles and rules uh, by observing the Dow Jones in the late 1930s. Remember the great US Depression is why we are enjoying what we are enjoying right now. All right. It says what we basically derived was this: uh, mass psychology or behavior, they trend and reverse in recognizable patterns which are called as waves. All right, markets are moved by the mass psychology. All right, the mass psychological behavior of people. That is what is moving the markets because of the buying and selling. All right, you don't need to know that. It's impossible to know the mass psychology or the mass behavior of millions and millions of traders. But what you can come to know is if you can identify those waves which are forming, and what we are going to see now, because they form in a specific pattern and they repeat themselves. That's what I'm trying to make a point here. All right, and the second statement is even more interesting. It says, if I give you a very crude example, the smaller format of the waves, all right, the smaller format of the waves, or the smaller time frame of the waves, they are busy building blocks of the larger time frame. All right, if I give you a crude example, if you wanting to build a wall or a building, you start with a base or a floor, and then you bring up brick to brick and make a small wall, and then a floor, and then another wall, and then another floor, and then another wall. You see, so the smaller blocks are busy building the larger building. Do you understand? And that's how it goes. So that's how you can correlate with the time frames. You go on the smaller time frames, you still see the same pattern, but in a smaller format. And the larger time frames, again, the same patterns, but on the larger scale. This is amazing. It helps you a lot to trade with confidence. All right. Please sit tight and let's look into how the pattern, basic pattern, looks like. Predominantly, uh, let's say if the market is wanting to go on the higher side, or if it wants to build an uptrend, then you would see a five wave movement on the north side. I'm defining the waves here: wave 1, 2, 3, 4, and 5. All right. So predominantly when it wants to move in the on the uptrend or the not necessarily all the time the uptrend, it could be a part of a corrective wave as well. But for now, for the basic understanding, let's stick to this rule. All right. And these waves are labeled as 1, 2, 3, 4, and 5. So they are labeled as numbers. All right. So the first step you have is a five-wave movement towards the major direction. Let us put it this way. All right. And here the major direction is an uptrend. Ideally, that five wave will be followed by a three-wave correction. I don't see a question here. It was just a gesture. If I see a question, I will pause and try to answer that. Okay. So after a five waves movement towards the major direction that the market wants to take, on this particular screen, it is on the north side. Ideally, what you see is a three-wave drop. Now, I'm constantly using the word ideal because it is not always necessary, all right? But for now, I believe that we are all beginning to understand. So let's stick to this, and later on, maybe my webinars for January are fixed, but come February, we will come up with more explanation. I think more people are joining and they are waving me hi. So a warm welcome to all of you who are still joining. And if there's a question, I will pause and I will try and answer that. Okay. A very warm welcome to all my brothers and sisters who are still joining in. All right. So ideally, there is a three-wave movement opposite side of the previous movement. See, the movement here, 1, 2, 3, 4, and 5 was on the north side. That means when you see a five-wave movement, predominantly what you believe is that the market is wanting to make that as a major direction. All right. So the major direction here is on the north side. When you see that the five waves are complete, that is wave 1, 2, 3, 4, and 5 are complete, there are ways to do that. All right, there are ways to find out, not just the counting. We will try and address that at the end of this webinar as well. Ideally, what you need to put it in your subconscious mind is this. After a five-wave movement on the major side, there is a three-wave ideal movement on the opposite side. All right, so to put it in a very simple manner, five, let's say up in this slide, is ideally followed by a three down, which is this is the left side is towards the trend, and the other side is counter trend. Right? Let's go into more details now. The three-wave movement is labeled as A, B, and C. So you label the five ways you label in letters 1, 2, 3, 4, 5, and the three waves you label in alphabets. Please do show us how to count waves on real charts. Asma, yes, I will do my best to show it on the live chart as well. Just to let you know, predominantly we always do on the live chart in a different session, but I will be doing it on the live chart as well. Okay. Yeah. Any other question here? What time frame is best for observing these waves? uh, Namdi, if I pronounced your name correctly, Namdi, the best time frame, the ideal time frame would be an hourly chart. Don't, if you're beginning, all right, if you're novice, then 1 hour, because even now I sit on an hourly chart and spend my time counting waves there. All right. Okay. I think I've answered the questions. That the questions are coming in a yeah, in a different pattern here. It's not coming sequentially. Okay, fine. So let's proceed. So put this in your subconscious mind, brothers and sisters. 5 and 3. 1, 2, 3, 4, 5, followed by an ideal ABC. Okay. Let's go into a further details now. That is already done. 5 up, 3 down, 5 up, 1, 2, 3, 4, 5, and then 3 down, labeled as ABC. Now, this is what may give more justification. The 5 waves up is known as the motive phase. Motive phase means it is moving with a definite motive, with a definite purpose, all right, which is towards the trend. It's telling us a story. It's shouting loudly that this is the major direction that I would like to take. All right, it's moving with a motive. The price action is moving with a motive. It wants to create higher highs. All right, always towards a trend. And the other guy is corrective, which is counter trend. I think we've got another question. Let me try and address that one. All right, that's just a hello. Hello, Valera. Uh, just excuse me. May I request? All right, it's a very good gesture to say or greet everyone. I'm humbled and I continuously would like to greet you all, but I only have one screen here. I don't have another screen. So when you have a question, when a question pops up, the presentation stops. So if you have a question and you put a question there, it would save us some time. I really appreciate your gestures, but let's continue here. So it's a motive phase and then the corrective phase, okay? So the motive phase moves with the motive. The price action develops in a motive. And the corrective phase, see what is the purpose of the corrective phase? Actually, there is no price action purpose, believe it or not. It may stop at the first support, the second support, the third support. There is no guarantee. So there is no definite purpose of price action, I would say. Yes, there are ratios that you can work upon, but the corrective phase is just to check the market movement. That's all. It wants to check the market movement. I cannot put it in more simplified manner. All right. So two things you need to remember: 5 up, followed by ideally 3 down, 1, 2, 3, 4, 5, and then followed by ABC. The 5-wave phase is known as the motive phase, which moves towards the trend, and the three-wave phase is the counter corrective phase, which moves towards the counter trend, or it is the counter trend. All right. So finally, okay, I would like to show this on a real chart as well now. We had a yes, it is recorded, sir, and the recording will be is ideally available. All the webinars are ideally recorded and they are available 24-48 hours after the webinar is delivered on the website. Yes, okay. And I will also give you my email address. If you don't find it on the website after 2 to 3 days, please write to me. I will help you out. So keep the screen in your subconscious. One, two, three, four, five, and ABC, okay? Motive phase and the corrective phase. Now let me pop up a real-time chart, which I have done the labeling, but I will clear some portion so that you're not confused. I'm going to clear some portion here. All right. All right. This is a dollar index chart from 16th of February 2018 onwards. All right, on onwards, it's a live chart here. So if I do label, if we do label, just have a view again if you want. See, five up followed by three down, ABC. Okay, so I'll spend some time on the real time chart now. So you got wave one completing here. All right, then you got wave two, which is a three wave. All right, and then wave three. I have not discussed the rule, but I am going to discuss it now, just in a while. Wave 3 is mostly the longest and the largest wave among wave one, 2, 3, 4, and 5. All right. And since we are on the chart here, you also need to understand that wave 1, wave 3, and wave 5, they themselves unfold into five waves. All right, I'm going to explain it to you on the other screen as well, but you just need to remember that waves 1, 3, and 5, they unfold into five waves, while waves 2 and waves 4 ideally unfold into three waves. Okay, so let's not confuse for the time now. Can you all see this wave 1, 2, 3, and then wave 4 I have labeled here? Actually, it should be there. All right, that's a different corrective pattern. It's not an ABC, it's not a standard ABC. So don't get confused. Wave 4 terminates here, and then you can see wave 5 rallying all the way towards there. Then you can see five waves: one, two, three, 4, and 5. All right, wave 3, just remember wave 3 is the largest wave, ideally, but it cannot be the shortest by any chance. If you see that wave 3 is the shortest of 1, 3, and 5, that means your labeling is wrong. There is something wrong in the labeling. Market is trying to do something else. You need to change your labeling structure. All right. So until here, if you are there with me, what is the next possibility? Next possibility is after five wave movement, there should be a corrective drop. Ideally A, B, and C. Okay. I have shown two scenarios here, but don't look at the alternate ones for now, so that otherwise you'll get confused. Just look at the bracket A. This is the first corrective movement A. Wave B goes and terminates over there, and wave C is expected to drop lower and terminate here. The structure that I showed to you on the slide is slightly different than what it's being being unfolded right now. I will try and explain both of them. Okay. I think there's a question. Which one is the question now? Okay, let's go down. 628. Why wave B is going up? Yes, Harish, this is what I'm trying to address. This is what I'm trying to address. Why wave B is going up? Okay, just give me a second, please. Okay. Now, ideally, what we discussed on the chart is ABC is like this. you have wave A, and then you have wave B, and then you have wave C, all right? Now, I've been using the word ideal all the time. There's another question. The problem here is, Alan, yes, the best time frame would be the hourly chart. I am presenting a daily chart here to give you a bigger perspective, all right? But hourly chart, sit on the hourly chart and do your wave counts. It is an ideal way to, yes, Harish, I'm explaining. Okay. This is known as a flat. I have to find out something. This is known as, this could be a zigzag or a flat. All right. There are three types of corrective waves, corrective patterns which can form. Uh, the one I have shown here is, let's not confuse. I'm going to change the name here. Let's say it's a zigzag. All right. 631. Where's 631? Where's the question now? Yes, William. If I get the time, I will definitely do analyze gold as well. Definitely, I will get the time. Don't worry. So here is a zigzag. Now, a zigzag is a 5-3-5 pattern. That means the first wave unfolds into five waves, the second wave unfolds into three waves, and the third wave unfolds into five waves again. All right. So it's a 5-3-5 pattern. Yeah. Then there is a flat or a standard flat, which is also looking like zigzag, but it is a 3-3-5. All right. I cannot go into much details because the time will not permit me to allow me to do that. I will do different sessions, and there is a lot of questions coming across here. It appears it is unfolding to expanded flat. Oh, former John, that's what I was trying to explain here. Uh, that is what I'm trying to explain here to my friend Haresh. That's exactly what I was trying to. You did my job easy here. So, Haresh, if you are there, what we discussed on the screen was a zigzag over here. All right. And what it is unfolding here is like this. You have wave A, and then you have wave B, which is exceeding the head of wave 5. And now we are expecting wave C, which could drops or close to the termination point of wave A, all right, or even lower sometimes. There's not certainty where it will go and terminate. So Harish, if you are there, and Mr. John, that was bang on target. I think it should be a flat or triangle because it has three waves. It could be a triangle, but too early to say that it's a triangle. All right, Mr. Smith. But the to put it in a very simplified manner, all right. The problem is the questions are not coming in a sequential form here. Yes, Harish, I think you got the point. So it is ideally trying to unfold itself in an expanded flat where it has produced wave A here, wave B goes above wave 5. Yes, it could be a triangle as well, but yes, that's what wave C looks like. So if it is unfolding as a triangle, we will have to wait for a bit more while, okay? But bottom line you need to understand is this. After five waves rally over here, what we are seeing here is a potential three-wave corrective drop At the moment, it looks like it is expanded flat. We will come to, yes, Mr. Christian, it is a very basic element that we are trying to discuss. More advanced will be followed starting February, I suppose, 6:34. So I have to look for the time first. Which time is your question coming up? Yes, I think 6:34 was the last one. How do you know points to label then? That's what I said. This is a basic class. Give me some time to come up with different patterns and how to label them. All right. First, I want to discuss a 5-3 pattern, a simple 5-3 pattern, Mr. Bright. And that's what we discussed on the presentation here. A 5-3 pattern you need to label like this: 1, 2, 3, 4, and 5. And an ideal three-wave pattern is an A, B, C. Now, in the chart that I showed up, wave B is going there, which is a form of a corrective pattern, which we will discuss in the later sessions, which is known as an expanded flat. All right. Now, you need to allow me to proceed further. Should I proceed further? Because we need to discuss the basic pattern first. All right, I'm not getting any reply. I think we got one. Mr. Allen, the difference between flat and zigzag. Flat is a 3-3-5 structure and a zigzag is a 5-3-5 structure. That is, wave A, B, C unfolds into 5-3-5 in a zigzag, while it unfolds into a 3-3-5 in a flat. All right. Yes, wave A has three waves, Mr. Smith. That's why it expanded flat. Expanded flat. All right. Should I move ahead with the basic pattern explanation, because we need to cover the basic first, and then I'm going to come up with some advanced presentations in the month of February. A small request explaining zigzag in a different. Yes, Haresh. Haresh, and not only Haresh, all of us who are, because on your demand in December, we I arranged for a basic session, not the live chart. Okay, so allow me to complete the basic part. There's another one coming up in January, and February we will start discussing different waves in a different webinars. Okay. All right. The problem here is the time. Okay, yes. This is what is. All right, let's proceed. Let's proceed. I got the answer from your side now. All right, please give me some time, because I have to design a series of webinars starting February, and I'm also traveling sometimes. So give me some time. I will decide, and we will discuss all in different webinars, different short webinars. Yes. All right. So on the other side, if you look at the downside, it is like this: 1, 2, 3, 4, 5. When the trend is down, or when the market wants to take a downtrend, it would drop 5 down, followed by a, now let's use the word ideally, followed by 3 waves up, labeled as ABC. What you need to predominantly understand, as because this is a basic pattern webinar, what you need to basically understand is the 5s and the 3s. The 5 waves is towards the trend known as the motive phase, and the ABC is the counter trend known as the corrective phase. Now, the way it gives you more confidence to trade is when you can identify and label your wave counts clearly. Just give me 1 minute and I can show you one more chart. There you are. You can see wave 1, 2, 3, 4, which took a shape of a triangle, and 5. So 5 down, which is now being followed by a potential 3 waves up, which is again taking a shape of an expanded flat, but on the opposite side. There is wave A, potential wave B, and if this is correct, then we should be seeing a potential wave C rally, which can terminate all the way towards 1.18, that is very close to A. At least with the basic pattern, you will or you should rather understand that after a 5, what follows is ideally a 3. Now that 3 can take shape of a standard flat or an expanded flat or a triangle, which we will discuss in the later sessions, all right? And the 5 waves movement that I have discussed here, you need to remember that next rule is wave 1, wave 3 and wave 5, they unfold into 5 waves again, and wave 2 and wave 4, they unfold into 3 waves again. So corrective waves, predominantly, please put in your subconscious mind, any form of corrective waves. Which are the corrective waves here? Wave 2 is corrective, wave 4 is corrective within the 5 wave drop as well. Can you identify? All right. And then the entire wave ABC is also labeled as a corrective wave. There you go. 5 down, 3 up, 1 to label as 1, 2, 3, 4, 5, labeled as an ABC. Left is the motive phase, price moving with a motive. They want to print lower lows here, and there it is a corrective phase. All right. All right. Let's look at some rules here. These are not all the rules, but simple basic rules. Waves 1, 3, and 5 are motive waves, while waves 2 and 4 are corrective. That's what I was saying. 1, 3, and 5, they would also unfold into 5 waves, and waves 2 and 4 would unfold ideally into 3 waves, unless it is a triangle. All right. But for the basic understanding, yes, corrective and motive is the best to remember. Wave 3 can never be the shortest of 1, 3, and 5. That is also what we discussed on the chart. Normally, wave 3 is the longest and the largest wave. This is a point which you need to know. Wave 2 can never retrace more than 100% of wave 1. What it means is this. Wave 2 terminated here, right? Wave 2 cannot go beyond the head of wave 1. This is the top of wave 1. Wave 2 cannot exceed that top when it is a falling market. In a rising market, wave 2 cannot drop below the head of wave 1. All right. These are some rules which are very useful and very handy. This is a very simple one. Wave 3 always terminates above the first wave. And wave 4, this is another handy one. Normally it's for the impulse wave. We will discuss impulse wave in a different webinar altogether. Wave 4 never enters the territory of wave 1. These are simple rules and guidelines that you may want to remember. All right. Okay. If I put a wave count here, could you identify? I have labeled this as uh, 1, 2, 3, 4, 5 by 5. I don't know where the noise coming from. If you're typing in any other language than English, then I'm sorry, I cannot identify it. All right. So what I was trying to present here is a count. If you could identify if the counts are okay here. Wave 1, 2, 3, 4, 5. Just a very basic count here. If you think these counts are okay. Now the problem is, where is the question? 645. There is an error here. So we already got an answer here. Mr. William, Mr. Kazem, and Sambane. Yes, all three of them identified the error, each of them. Wave 3, Kazem says wave 3 cannot be shorter than wave 5. And Sambane says wave 4 cannot. Yes, all of them are correct. So I just made a very silly mistake here. If all of you who are very beginning, if you can identify as well, there are three errors being created here. Please excuse me for this, but yeah, the problem is the time frame of the question is hayward. So that's why I'm taking time to find out whether I have addressed the question or not. All right. So look at the error here. Point one, wave 3 is clearly the shortest one over here, which is wrong. Wave 4, I have entered wave 4 or terminated wave 4 below the territory of wave 1, which is again incorrect. All right, so two errors here. There you go. Wave 4 enters territory of wave 1, which is not correct. Wave 3 the shortest, which is again incorrect. So let us try and look at a story now, and then come back on this chart and try to label this. Okay. I think I've got another question. 647 onwards. 646. Mr. Smith says this can be an ABC wave 2. B is flat. Could be possible, Mr. Smith. That could be possible as well. He says Mr. A and then A B C wave B and then C. That's what he was saying, right? that is one of the possibility. But before that, for all of us who are very beginners, let's understand a story of a fractal nature, which is the next question, 647 onwards. This is a big problem for me. What I got is the last one from Mr. Smith. Okay, let's go into the story first. I think we have another one, but I cannot find where it is. It's not coming sequentially. That's the problem. All right. Smaller waves are always busy forming larger waves. Let's look into a possibility here, which could be. You see five waves up, right? Now these five waves actually formed in this manner. And then you have a three waves down. If you notice, I changed the labeling here into bracket one. I've got another question. Please excuse me because, yes, sir, wave three cannot be the shortest one. You're all correct, and it has already been identified. Uh, both the errors have been identified. What I'm trying to now tell all the beginners that there is a story when the waves are constructed. Now the problem in addressing the questions is that I'm not getting it sequentially here. It is coming, so I have to look at the time first. I think 6:50 is the last question, which says wave three cannot be shorter than wave five. That is already being discussed, and you are right, sir. If you notice, I have added two labels here extra. Which I've said wave one and I've put it into a bracket one, and wave two, which I've put it into bracket two. What I'm trying to say here is this: the fractal nature of the market. If you remember the first slide of Mr. Elliot, we discussed that smaller waves are busy forming the larger waves. Anything after 650, anything after 650. I don't have a question after 6:50. I need to go. All right, Marina. See you some other time. Thank you for being here. All right, then let's continue the story here. I'll come back to the questions just in a while. I need to just explain the story here for all the beginners. Now, one into bracket and two into bracket. How does it work? Are you able to see the smaller waves here? So wave one could have unfolded as a five waves, then wave two as three waves, wave three again as five waves. So that is the story. The smaller waves are busy building the larger format, or the larger waves of the same degree, or the one higher degree here. So when you see wave one, two, three, four, five complete, it forms the first wave of one larger degree. All right. And when you see a corrective phase like ABC, which unfolded into a zigzag here, 5, 3, 5, it, it forms wave 2 of one larger degree. This is what is the fractal nature of the market. The smaller wave, the smaller time frames are busy building the larger waves of the larger time frame. So if we want to relabel the chart, or before going there, what you need to understand is, see here, five waves, 1, 2, 3, 4, 5. plus 3, that is ABC, made 8 waves. On the same diagram, if you count waves here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, or so on the same diagrams, you just put it under a microscopic view, you will see 21 waves, and on the right hand side you will see 13 waves, that is 5, 6, 7, 8, 9, 10, 11, 12, 13, which is 34. So you don't do anything, just put it into a microscopic view and you've got 34 waves. Believe it or not, if you put the smaller waves again under a microscope, you will get 89 on the left hand side and 55 on the right hand side, which is equal to 144 waves. So this is what is the fractal nature of the market, which we discussed on the first slide as well, and the agenda as well. There's a smaller waves are always continuously busy working on the larger waves. All right. So if I would want to label this chart now, what we brought up earlier, I would say wave 1, potential wave 2, and wave 3 is under construction. As I said, this is not the only option, but I would go with wave 1 here, 5. If I would see if it is a 3 here, wave 2, and then if it is 5, that is wave 1, 3 again, wave 2, 5 again, wave 3, and wave 3 of a higher degree is in process. High probability wave count, that's what I'm writing here, is that the third wave into bracket 3 is in progress. So not this third, but the third wave of a higher degree, that's into bracket, is in progress. All right, let me take a question if it is there. I don't know, I have to find out the time frame again, which was the last time the question was posted. Yeah, I don't think we have any question. Thank you, Marina, for being here. Thank you all who had to leave. Thank you again, because as I always keep on saying, this is your class and I'm just a facilitator here, and I'm not a normal orator or a faculty. I just deliver my passion, that's all. I'm a crazy chartist and I'm always on my Euro USDs. Predominantly, that is what I like analyzing and trading. All right, now let's move a step ahead. Can we plot wave on closing price? I didn't understand your question here, Haresh. Haresh, I'm sorry, I did not understand your question. So that's what you have your basic structure as. Now I'm running short of time here, but I will at least discuss one trade opportunity. How do you find that? Apply rules and guidelines for the wave principle, point number 1. Combine with, I'm coming back to the question, please, again. Combine them with support resistance, Fibonacci ratios, trends, and candlestick patterns if possible, and then spot your potential trade setups. Okay. Now, one, if you can find out one place to trade, the one best place to trade, let's look into strategy number 1. Before going that, let me try and see if I got the question right. Haresh, uh, Line charts are very difficult. I don't use my line charts. I'm not good at that. I love candlestick chart because of the candlestick chart patterns and the highs and lows. But anyways, if you just flip it to a line chart, you can plot your line charts. But line charts are not based for price analysis. Believe it or not, that's what I know. And I don't place my trades or analysis based on the line charts. Okay, so if you want to analyze your charts, please come back on a candlestick or use a bar chart. Now, as I said, my friends, I'm really sorry we are running short of time, but let's discuss one strategy on the slide and on the screen before we address further questions. Okay, or when you have waves 1 and 2 in place, all right, you try to buy on a Fibonacci 61.8% retracement or a 50% retracement of wave 1, that is a bullish candlestick pattern. Look out for a bullish candlestick pattern there, and then place your stop loss below the head of wave 1. I repeat, when you have wave 1 and potential wave 2 in place, watch out for a Fibonacci retracement of wave 1, 61.8%, ideally, sometimes 50% as well. Place your stop loss below the head of wave 1 and let it run towards the Fibonacci 161.8% extension of wave 1. You can take your profits there, which ideally would be a wave 3 termination point. Right, this is one strategy which normally is the best in the sense that your risk reward ratio is going to be amazing here. Actually, there are four strategies on a wave that is 5-3. I'm giving you one here. We are discussing one of the strategies here. You buy at wave 2, the termination point of wave 2, find out a Fibonacci retracement, bullish candlestick pattern, and let it run through the 161 extension. Now, this is what it exactly means. You have wave 1, you have wave 2. Run your Fibonacci retracements like this, 50% or a 61.8%. Watch out for bullish candlestick patterns like a morning star or a tweezer bottom or an engulfing bullish. All right. And then let it run through, place your stop loss below the head of wave 1 and let it run through the 161 extension. There you go. Close 161 extension. All right. Let me flip to a chart now. Go to a dollar index. You have wave 1 and then wave 2. So I am taking a retracement of wave 1 here. If you look at that, wave 2 went all the way towards the 0.618 retracement level, which is the third one, right? And I had a practically tradable engulfing bullish candlestick pattern as well over here, right? So you buy at the end of the candlestick pattern around 89.34, stop below the head of wave 1. I'm showing a historic chart right now because that is what is the strategy we had just discussed. And then you go and take your extensions. If you are using an MT4, you just need to take simple extension. It will show it to you. If you are using trading view, you need to give three inputs. The 161.8% is 93.28, where normally wave 3 would terminate. In this case, it got extended and it terminated around the 94.90 mark. That is 150 points higher than the projected one. All right, this is 1 point, but there are actually 4 points. I'm going to quickly run you through the chart. This is the first entry, that is the termination point of wave 2. All right, so that is a price that I've given here. You buy it around 40, stop loss goes below 100, and the take profit is 161.8, which is around 162. All right. Strategy number 2, you took a trade here, the best possible trade at the termination point of wave 2, and the second strategy would be to buy at a wave 4, and you want to place your stop loss just below the head of wave 1. Ideally, because prices should not go below the head of wave 1, so you would be safe if you place your stop loss there. All right, and then close 61.8% or 61.8% extension of the entire rally, wave 1, 2, and 3. At least let it run above wave 3 to close your trade. All right. So I'm taking these two strategies for now. Let me see if there are questions that I can answer or address. 6:57. Got it. Okay. 7 o'clock. I think we don't have any further questions. All right. Let me see. I think we can extend the session for another 5 minutes. We can take over the remaining strategies as well. I'm quickly running through the chart now. So you buy at the termination point of wave 4 and let it run. The third strategy is a very aggressive one, which I sometimes like taking this as well. I think we have another question. HARSH dot Narendra Jappi at the rate of FXTM.com. Harsh.Narendra.Jappi at FXTM.com is my email ID. Please feel free to send a message or drop an email anytime you feel like, and I will be more than happy to answer your or address your queries. All right. So I think I'm going to stop here with two trading strategies. Many participants are not having the time to stay back, but anyways, we will. Do you mean that at the beginning of wave 1, put the stop loss and take profit? Yes. The take profit not at the beginning of wave 1. No, 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 no. The stop loss, put the stop loss and take profit at the not the beginning of wave 2, my brother. The take profit will be 161.8 extension of wave 1. I don't know the name here, waiting for name 2000025. All right. All right. I think there are no more questions to address. In strategy 2, again, Mr. Allen, you have to consider the same pattern, the candlestick pattern, either a morning star or a tweezer bottom or an engulfing bullish. All right. Please excuse me if I have missed some questions to address because they are not coming sequentially here. They are coming upside down, topsy-turvy. In any case, Mr. Smith, the 5 patterns is, if I understood your question correct, the 5 patterns, the 5 basic or the 5 tradable patterns would be an impulse wave, an ending diagonal, a flat zigzag, and a triangle. Right. I've tried to answer all your questions here, but please excuse me if I missed some. Do feel free to write an email whenever you get a chance, and we will take it from there. The next session that I have is on the 15th of January, same time, but we will be discussing live charts over there. And starting February, I'll come up with, or we will come up with different chart patterns in a separate webinar each. All right. So if you have any other questions that I can address, or yes, thank you, Mr. Smith. I believe that there are no more questions. And if you do have, which I have not addressed here, okay, crude oil chart. Okay, someone was asking for a gold chart. Please, let's do that quickly. If you are there, I don't remember the name, but if you are there, let's do it. Okay, because this is the best part. Any analysis, I will never leave unfolded. All right, I don't know I don't remember the name, but if you are there, this is the gold chart. Uh, if you look at the wave from 1365 drop towards 1160, it has almost retraced 60% of that, more than that. It is right now hovering around the past support, turning resistance area here. So it could be possible that an ABC corrective rally is done, or maybe there might be one more high around the 1300 plus zone, 1310 zone. All right, but I think the projected rally. So we were actually projecting long from here 1180 onwards to a target of 1270. It has now exceeded 1270, 1300 levels. There might be a continued drop. If it unfolds into five waves, then a meaningful top is formed at 1298. But if it doesn't, then there might be one more high. But believe it or not, the top is almost in place. The risk now is on the south side. I mean, you should not expect much rally, maybe towards the last one last leg towards 1300, 1310 levels. That's all. But if you see five waves unfolding, which is not the case right now, I could see 335. Maybe it is just producing a flat here, or it's already produced a flat 335 maybe. So there could be one more high. There could be one more high, 1310 zone, but that should be it. I don't know if I have addressed your question. Crude oil, Harish, I am trying to come to your question. It can go down few pips. I'm coming to crude oil. I'm just coming to crude oil. I'm just trying to see if there is any other question. Yeah, thank you, everyone. I I see that many of them would not have the time to stay back, but let's quickly analyze crude oil as well for Harish. Let me see if I can find Brent crude oil. Yes. Or WTI. Let's do WTI. US oil. Okay. I have to take you to a larger time frame to give you the entire story because I don't like discussing just the shorter part of it. Crude oil, believe it or not, has still some downside left. The drop, which began from 76 levels, is still ideally incomplete because of this. it could go all the way below 26, but not immediately. There has to be some pullback. Now that pullback, let's try and find out how much it could be. It can pull back all the way towards 55, at least the 38.2% retracement, and also possibly towards 63. But 63 is too early to predict now. 38.2% should be ideal retracement level. That is 55. It is right now trading around 49.50. So maybe a $5 rally should not be a surprise for crude oil. But I don't really trade crude myself, so I don't really follow it meticulously. But yes, Euro, USD, dollar index, and gold I do really follow meticulously, and also Dow Jones. Crude oil, maybe it has some upside left, but that is just the retracement. It is not a point to buy, believe it or not, because I have seen the crude oil structurally on a weekly chart, and believe it or not, it is still wanting to drop all the way. That was the first one, wave A, the wave B, and it could be wave C here, but maybe another low is still on cards. Could be on cards. Watch out for a rally until 55. You should be out of your long positions if you are. Ideally, don't be. It's not advisable to be on the longer side, but beyond 55, you have to look into the bears coming back into play again. And if they do come, then 55 onwards, there could be another bearish move down. All right, I think we have discussed the basic pattern and also a few of the questions. Now I don't know where the last one is now. 716, 716. So if please excuse me if I missed some questions, but ideally we have tried to answer them all. And thank you so much for your time and presence. And I would like to bring this session to a pause here. And if you do have any questions, please do not hesitate to write an email anytime and I'll get back to you. And of course, 15th of January, same time, the live trading session will be discussed. All right. So do take time and come back on 15th of January. I'll be seeing you guys another 3 times this month before I give my schedule for February out there. All right. Once again, thank you for your presence and thank you for all your questions. Take care and God bless. Goodbye.